afternoon, everyone. On behalf of New York MBA President Mike Culver, our Executive Director Joe Culver, and the entire New York MBA Board, thank you for joining today's webinar. My name is Elizabeth Cheney, and I'm proud to serve on New York MBA's Education Committee alongside my co-chair, Bill Kennedy. Before we dive into today's session, I would like to remind everyone that the New York MBA will be on break with our webinars in July and August, and return with new webinars later in September after our convention 2025, September 15th through the 17th at the Turning Stone Resort and Casino. We encourage everyone to register for our convention and enjoy the early bird savings that ends on July 18th. Now, before we begin, just a few housekeeping items. If you experience any technical issues during the webinar, please notify us using the chat function. All participants' lines are muted except our presenters. We encourage you to ask questions throughout the session, the chat and/or Q&A functions. After the webinar, we'll share the presentation slides and relevant resources with you. Stay connected with the New York MBA. You can find us at LinkedIn at newyorkmba.org and on our YouTube channel at NY Mortgage Bank Association, where we post webinar recordings such as this one. Lastly, I urge all professionals to consider joining Mortgage Action Alliance. It's free, easy, and a fantastic way to stay informed about legislative issues that affect our industry. And now I have the pleasure to introduce today's host of our 10 on Tech series, Jackie Garazalik. Jackie is a partner at Person & Ferdinand. She serves as a trusted advisor to businesses, helping them navigate the complexities of cyber incidents from initial intrusion through notification and recovery. Additionally, Jackie is on the board of directors here at the New York MBA and a board of a regional Northeastern New York MBA. Now it's my pleasure to turn the webinar to you, Jackie.
Thanks, Elizabeth. I am not going to take too much of your time this afternoon. We have a great presentation today from Optimal Blue. Just a quick kind of precursor to what we have going on in the fall. Elizabeth mentioned that we're off for the summer, but when we come back in the fall, we're going to have three great 10 on Tech sessions. In September, we're going to do What the Tech Are You Talking About? In October, we have Quick Win Cybersecurity for Small Businesses. And in November, we have Cyber Insurance for Individuals. So with that, I'm going to turn it right over to Optimal Blue so that they have the full time to give us all of their fantastic information. Drew and Jared, it's all you.
Thank you, Jackie. Appreciate it. And thanks so much, New York MBA, for having us today. We're excited to be here. Talk a lot about technology today. Obviously, myself, Drew Schindewolf, PPE Solution Specialist with OB. My colleague, Jared Sammy, have a lot of great information to share with you guys today. So as we move along, just wanted to kind of give you a brief overview of obviously what we're going to be talking about today and why we think it's relatively important as we move forward in the year and in the coming years as well, right? Talking about technology, how important that can be for running a profitable mortgage business, right? Making sure that we enhance all of your clients and your members' experiences, right? We want to make sure that you guys understand when choosing a technology partner, right? That it is a long-term solution most of the time, right? We want you to understand that there are a lot of offerings today in the marketplace, right? But we want to make sure that when you're choosing those partners, that you're making a relatively understanding decision in regards to how that's going to affect not only yourself today, but anything that's going to impact with industry standards later on. So we're going to focus on new innovations that are transforming secondary teams. I'll talk a little bit about some of the PPE perspectives and what that looks like, and then we'll have Jared talk a lot about the secondary hedging marketing perspective as we move along. Just a quick overview about Optimal Blue, just kind of a chart here, just to show you kind of where we stand in the industry in and of itself. Obviously, one of the ones that I love to talk about is that we see over 1 in 3 locked loans in the United States today. So we are a large aggregator of mortgage-related information as well as data. 1.1 trillion in transactions last year. So again, there's a lot of data and information that's flowing through us. And from a technology perspective, obviously, that's through our PPE, that's through our data products, that's through our hedging and trading platform, as well as all the MSR valuations. You can see here that we're relatively #1 in all of these market areas. So let's talk a little bit about the agenda we're going to talk today. Again, here, I'll leave this up here, but we're going to talk about these individually, right? Talking a little bit about what does the mortgage landscape look like today? dive in a little bit on product and pricing engines, how that can drive your profitability and enhance that consumer value and that experience, right? Talk a little bit about an implementation roadmap. Once you've made that decision, what does that look like? And then we'll talk about some future trends in mortgage technology and then lean in on that secondary marketing and hedging perspective. So let's talk a little bit about the mortgage landscape today and what that looks like, right? We want clients to understand that from a customer-centric focus, that's really where we want to live. And we want to make sure that you understand that that mortgage provider that you're choosing to work with today is prioritizing your customers' needs, right? And looking, as I mentioned before, long-term satisfaction over those short-term gains. We want this to be a relationship that lasts a long time. And we can only do that by creating that trust and personalization, right? We understand that it's a very competitive landscape today in everything kind of mortgage related, right? But you want to make that choice with those technology vendors that they're always going to maintain that customer first philosophy, right? Couple of challenges that you're going to see out there is people talking about legacy systems that may not integrate well with modern mortgage technology. Well, OB, for example, has been around for 20 plus years, right? So we lean heavily into that word legacy. That means that we understand all the specific needs for independent mortgage banks, regional banks, credit unions, right? We've been in all of those areas for a long time, right? From a product and pricing perspective, right? Manual mortgage pricing is just no longer being acceptable anymore, right? Those outdated loan origination systems are also being replaced with new technology on a daily basis, right? The need for transparency and accuracy is paramount, right? Customers want to know specifically that they're getting clear and fair product and price offerings to them, right? We want to be able to deliver that solution to those clients that way, and that it creates an opportunity for innovation, right? We don't rest on our laurels, or any company shouldn't. We want to make sure that when you're looking for a product and pricing engine, that we're going to continue to maintain that level of efficiency that you've gained through us in the past, and that we'll continue to move forward with that, leveraging speed and accuracy and that customer engagement, all while staying aligned to our core value of what we're doing, which is trying to maximize the amount of revenue that our clients can gain by utilizing our technology. So let's talk a little bit about mortgage product and pricing engines, right? The product and pricing engine is really that specialized system that you use to automate that real-time product pricing, that comparison and margin management. Also to include eligibility guidelines, right? So you want to make sure that you choose a system that can do all three of those things on a regular and very specific basis, right? Real-time pricing, that product comparison, and compliance piece, all of those three pieces, right? We want to make sure that that transparent price is being driven accurately, more so above everything else. What's the use of a product and pricing engine if you can't focus in on getting accurate pricing, right? We want to maintain that accuracy is paramount. You also want to be able to offer mortgage products that align with your diverse borrower profiles. I talk to our clients all the time, and I mentioned that it's such a benefit because they know specifically their own lending environment, right? Whether or not you're a small independent mortgage, either a bank or a company that just kind of works in one town, or if you're lending across the entire Eastern Seaboard or something like that, you know specifically what you have, and that you can tie those products to meet all of those customers that you have. Right. So the value proposition of a mortgage PPE engine, right, is wanting for you to minimize that reliance on that manual process, as I mentioned earlier. I mean, I've been in this industry long enough to remember what a paper rate sheet meant, actually getting a piece of paper, actually faxing that out. Working in those type of environments obviously is just not acceptable anymore. You need to be speedy. You need to be accurate, as I mentioned before, and have those workflows already built into a system, right? It's that combination of that technology where you can create that transparency of fairness and then build that customer trust through the effective use of your product and pricing engine. So how do we drive profitability, right? Profitability in and of itself can mean a lot of things depending on an institution, right? Profitability for a credit union could be totally different than a profitability from a regional bank or a national bank, right? But all of these things that we have listed here is going to be true for all of them, right? The operational efficiency that a PPE engine can help out with by increasing those faster turnaround times, right? Significantly reducing the response times. And when a borrower is asking for a quote, and the ability for an originator to get that prompt responsive service, that's what the engine's built around. And of course, error reduction, right? We're talking again about that accuracy component. We want to make sure that that near instant calculation that's being done by the system is going to reduce that human error by building in all of the LLPA, all of the eligibility. Any compliance or regulatory issues are built into a system to make sure that when you deliver that pricing that you can stand behind it. And then, of course, from a profitability perspective, margin management and risk mitigation, right? Having run secondary and understanding, really utilizing the PPE to drive that protection and reduce that risk management and mitigation is really important as well. You know, the ability to differentiate margins within certain branches or certain products or certain investors, right? The ability to really get granular in how you want to create that profitability from an internal perspective is really important, right? And then adaptive pricing, right? We understand in today's environment, the market really can move very swiftly, and you've got to be able to be focused while those market fluctuations are going on, right? So you've got to be able to adapt quickly. Utilizing a PPE engine can definitely help you do that. So again, from a customer experience, right, they understand that what they're really asking from an originator is do a couple things for me. I need real-time, clear pricing, right? I want to be able to have that trust and that confidence that when you give me that price, that you're standing behind it, and not 30 minutes later you're coming back and saying, you know, that price was inaccurate because unfortunately there was something wrong with the system, right? You want to build that trust. That accuracy component really, again, becomes paramount. And then the ability to create those customized solutions, right? Create that mortgage offering and those individual products that are tied directly to each individual's financial profile, right? Everyone's going to want and need something a little bit different, even if they're all looking for a generic 30-year fixed rate. There's so many components that are built in, not only to eligibility, but to pricing as well. You know, all these different FICO, LTV requirements, right? So you need to be able to customize every single one of those solutions within your PPE. So let's talk a little bit about finding that solution. What does that look like if you are a lender looking for some assistance, right? Some technical assistance to create that tangible benefit for your mortgage operation, right? I mentioned it again, and I'll continue to measure it, is that pricing accuracy, right? You need to be able to provide that instant mortgage pricing that aligns with the current market trends, right? You're going to ensure that transparency and obviously build that trust through that accuracy. And then the dynamic rule engine, as I mentioned before, there's so many different things that each individual borrower may have that sets them aside from any other client that you may have. So you're going to need to be able to have some settings where you can manage those differences, whether it be through a margin or a product offering, right? You want to be able to make sure that the product offerings you have can be dynamic based upon any of those borrower-focused lending practices you may have internally. And then, of course, seamless integration, right? We can't talk about technology about one product and not think that it's not going to work with another one. Integration is, again, very important in today's environment. The system that we have from a product and pricing engine, you want that to integrate with your LOS system, right? These APIs that we've designed that work seamlessly to transfer that information forwards and backwards to those systems is very important because you want to continue that workflow continuity, right? You don't want to have to manually take any information that you have today and manually put it into a system. You want to rely on those APIs to seamlessly transfer that data, which leads into then automated workflow management, right? You can't create that workflow management without having that seamless integration. you can't streamline those processes, right? By reducing those manual tasks without having that integration. And again, by doing so, you can enable your staff to focus on more personalized customer service than having to worry about following a step of 10 different things that you need to do. By managing this through an automated workflow, which RPP can do for you, really eliminates a lot of those extraneous pieces that you would have to do. And then, of course, from a regulatory and compliance support perspective, we want to make sure that our compliance friends understanding that the pricing that we're delivering to the borrowers are accurate and follow all of the regulatory guidelines. We've got built-in checks and balances within our system that looks for what we call an indicative QM run. That's running those checks and balances against the CFPB rules and high cost lending pieces. So there's a lot of regulatory pieces that need to be maintained, and you want to make sure that a system that you have internally can manage all of that for you. So let's talk a little bit about how you can stay ahead of the curve here, right? Technology, as we know, in anything, it's not static. It's obviously continually evolving, probably faster than we would all like it to at times, right? But in doing so, we need to think about technology because we're needing to stay ahead of the game, right? We need to anticipate what our customers' needs are. We can leverage data, as I mentioned before. We are one of the largest data aggregators in the marketplace today. We've got a very large denominator of data that you can utilize to understand those borrower profiles. And utilizing that data, you can adjust your mortgage offerings, right? You can't really understand where things are unless you take a deeper dive into not only what you're doing, but also from a comparative standpoint as well, right? And you can do that by creating strategic partnerships, not only with the technology that you invest in up front, but you can choose those partners that collaborate with industry experts, right? There's another way you can do that. Professional associations, kind of like the New York MBA. Great example, right? You guys are all here for a reason to share those innovation and those best practices by joining these associations. So a great job there to begin with. And then, of course, scalability and agility, right? You want to make sure that your PP solution is not a stale solution, that it's only built to get to a certain endpoint. It needs to scale and it needs to grow as you do, right? So again, we talk to a lot of different clients who can be as small as a 2 or 3 user customer who's got just a couple of originators to some that have several hundred originators, right? And do various amounts of loan amounts from a monthly basis. You want a system that can handle both of those, right? Because as we know, this system, the market in and of itself, and the ability to maintain flexibility to offer those new products or adjust pricing in a very quick amount of time in response to what we're seeing in today's environment. You want to have the scalability and agility with a system, technology system to accommodate that. So let's talk a little bit. You've made that decision. You've kind of understood kind of what you're looking for from a technology perspective, but now you need to implement that, right? So an adoption plan is obviously something that all of you have gone through at some point, but let's kind of look at it again from an overview perspective, right? You've done an assessment, you've done an evaluation, right? You're looking to create that comprehensive review. First off, you got to understand where you are currently today, your workflows, the operational pain points. We do this through a lot of discovery calls. We want to make sure that we understand where you are, how you're working through your current environment, and if there are any pain points in that. And then in turn, we can create a solution, right? A customization, if be, where we can implement a plan to help you move forward with your technology solution, right? You can also collaborate with other industry experts, right? To understand how your PP solution can be specific to your organizational requirements, right? And once you deliver that, whether you create an internal pilot program or you create some internal milestones that you guys need to reach before you move forward, that's always a great plan, right? Talked a little bit about integration with existing systems and how important that can be. Leveraging APIs that automate those key workflows, right? definitely something to think about. And then from a staff training and change management perspective, right? You want to be able to roll out comprehensive training programs. If a if a company comes out with a new technology and there's not an effective training program, you're really doing yourself a disservice, because they're going to spend the majority of their time trying to use the system, whereas they really need to understand what they need up front and how to use that system effectively. So you want to make sure that you have an effective training program up front when you initially roll out that program. And then, of course, once it's rolled out, you want to monitor and define those KPIs, right? Whether it be pricing accuracy, speed error, reduction, using real-time feedback and performance data, right? You're going to want to have meetings about that on a regular basis. Not only from just the people who mainly use the system, for us, the PP would be originators, but you would want any other person who's tied into that, whether it be, again, somebody from a compliance department, your IT department, right? You want everyone to have some sort of input as they're following along, as you're rolling it out, and it continues to move along in your use case. So let's talk a little bit about some of those risk management solutions, right? These strategies can be customized, right? And they should be, right? To make sure that you're compliant, secure, and that obviously you're looking forward to your customer-focused operations that you're running today. As we mentioned a couple times, let's think about this from a partner perspective. When you're choosing that partner, obviously you want to choose experienced vendors who understand those complexities from a a mortgage technology perspective, right? As I mentioned, OB's been in the space for 20 plus years. We've seen a lot of changes, and we continue to innovate on that mortgage technology front, right? But then you also want internally to create some contingency plans in case there's any potential system integration issues, right? You want to make sure that you've got a plan in place. Now, again, I'm happy to report that in 2024, there was zero downtime for our PP engine, right? Something we're, again, very proud on. And so far in 2025, we've had zero downtime. But again, always having a contingency plan if and when that does occur is always a great thing to think about. Data security and regulatory compliance, of course, right? As I mentioned earlier, in the PPE system, you want to make sure that it's being up to date with all of the new industry and regulations and the standards, right? Not only from a regulation perspective, but a data protection standards, right? So we're constantly updating our SOC reports to make sure that we're getting evaluated from our data protection perspective. And we also have our own internal regular audits, whereas you should as well, to make sure that you are keeping up to date with all of those security protocols and those safeguarding of that sensitive borrower information that you are currently responsible for. From a change management perspective, right? Understand that there are unique and cultural workflows within your organization. As I mentioned, I love talking to customers because every single one is almost a little bit different in the way that they do things. So you want to make sure that those changes are clearly communicated, right? And that you go into it with that customer first mindset. You can do this by doing early pilot programs. We talked about implementation and rollout earlier, right? Maybe it works best when you roll out new technology to have a couple of people that utilize the system in a pilot perspective, right? Or a beta perspective, right? To build that internal support, and that you can encourage adoption across teams as you roll it out further along the line. All right, a little bit more about some future technologies that we're seeing here. Obviously, artificial intelligence and machine learning, right? If there was any keyword for 2025, it's artificial intelligence, right? Using that predictive analysis and machine learning to tailor those mortgage products to emerging behaviors and preferences, right? This is a big piece that Optimal Blue has leaned into as well. Not only from a product determination perspective. If you're a loan officer looking for a product within a system today, you want to have the ability, like we do with our generative AI piece, to find some near miss opportunities that could be the difference between you gaining in or losing a customer, right? So using artificial intelligence smartly, not really to replace any functionality, but to augment that functionality that you already have, right? Same with blockchain and transparency, right? utilization of all these tools to facilitate the speed in which you are delivering information and protecting that information between borrowers, right? As I've mentioned a couple times now, it's because it's so important. You want to diversify your mortgage offerings, right? We're seeing that in today's environment, specifically with non-QM loans. I was just on a presentation earlier. We heard somebody was at a conference recently over in California, and they've heard that non-QM loans in and of themselves have tripled basically within the last year in regards to the popularity. And again, we're talking about diversifying those mortgage options, right? There are products within those non-QM space that really didn't exist a couple of years ago. And now we're seeing a huge proliferation of those products into the environment. So you want to make sure that you're staying up to date and expanding your product portfolio, whether you create a product internally or whether you lean out to other vendors who are offering that product, because you want to maintain your competitiveness and customer focused offerings by keeping an open mind when it comes to products, right? And then obviously a collaborative ecosystem, right? Build those partnerships with those fintech innovators, right? You want to create that solution that's going to continually evolve as we're doing here in OB, and you want to make sure that the other partners that you're collaborating with all have that same operational and efficiency goal in the future. So last couple pieces here before I send it over to my colleague Jared. A couple of key points, right? We're talking about the innovation in mortgage technology. It's not just about improving margin or profitability, right? It's always about creating that enhancement to that borrower experience. We're leaning heavily into the loan officer experience here because we know it has that a direct effect of enhancing that borrower experience, right? You don't want to lose a borrower because of a bad experience, right? The PP in and of itself can help you gain that borrower positive experience by delivering real-time accurate pricing and those product comparisons, right? They are essential in today's lending environment. And then a thoughtful lender-specific implementation strategy obviously is going to help you drive that profitability. But again, it's going to be that reinforcement of that operational excellence that you're going to send to your consumers and your customers going forward. That's really going to drive them to come back to you, maybe not for a mortgage, but maybe for another product that you're offering in your organization. So again, from a simple call to action, right? We encourage you to view that technology as a tool to deepen those relationships, to lean into looking at technology as definitely something that's going to achieve your financial and profitability goals. And then we urge you to obviously reach out to us if you want to continue that conversation about technology, not only on the PPE side, but again, what Jared and his team is doing over on the hedging and trading side as well. Okay, so with that, I'll go ahead and turn it over to Jared.
Awesome. Thank you, Drew. Thank you all for joining us today. I'm Jared Sammy. I'm part of the Capital Market Solutions Specialist team at Optimal Blue. And on my side of the business, efficiency, profitability, those are the main concerns when it comes to secondary marketing. And from managing your pipeline, selling loans, there are tons of ways that you can improve your strategy. And we're going to go over some of those when we take a look at our Compass Edge platform and all the benefits there. But let's take a moment here, discuss some of the MBA Q1 performance report results. In the first quarter of the year, we saw profitability is still a struggle for most lenders. Those high interest rates have really, impacted production. Lenders that are, facing the most challenge are those that are, having those lower average volumes where, economies of scale is really not playing in their favor. They've got a lot of fixed costs to carry there. Of those lenders, the smaller lenders, those who actually originate those average loan balances under 250K are hit the hardest. You got a lot of margin compression, volumes are reduced. It's really, painful process to actually be profitable these days. Now, the balance point that we're really at almost a 50-50 split here when we're talking about profitability. Those who are actually able to cut a profit versus those who are operating in the red. And clearly, there's a lot of work to be done. And while production numbers are low, this kind of gives us a great opportunity to advance our technology stack. Take a look at the tech solutions that can help us make ourselves more profitable and efficient so that we can take advantage of those volumes when they do pick up down the road. And as Drew mentioned, leveraging a PPE and technology can really create those gains necessary to continue to improve on that borrower experience. And I'd like to take a little time here to talk about some additional areas where we can apply some technology to your benefit. Next slide. Oh, that's right. All right, cool. There are software solutions for all aspects of your business. And when you're considering your secondary marketing, technology can really streamline processes, help you maximize your profitability, even in the most volatile conditions. And if you start to leverage your data for insights, you can really take advantage of everything that you've been working up to so far and really dive into those insights and get the data to work for you. And we believe easily accessing your own data using AI tools is going to give you that greater ability to review, your performance, make strategic decisions that's ultimately going to help drive your business forward. We're going to talk a little bit about Ask OB down the road. That's one of our new AI features that we release. It's really awesome. Taps into your own data for all the PPE side currently, and then hopefully the hedging within the next quarter. So very interesting stuff there. We can also talk about recapture, being proactive in mining your portfolio for refinance opportunities. It really helps you recapture all those borrowers. Borrower retention is huge. If you have a servicing portfolio, you worked on building that up for a long time. You want to be able to defend that. You don't want to have runoff impacting your cash flows. So taking a look at your opportunities based on your servicing portfolio, your LOS data, and really mining that and being proactive in making sure that your borrowers are well aware of all the offers that you can make them for payment savings or access to equity. It's going to be a huge game changer in being able to maintain that first contact point with them and really defend that relationship that you built. And keeping your voice strong in the industry, it's a struggle. You've got social media, different platforms, groups that you're a part of. It could be a daunting task. And considering all the compliance rules and the time it takes to create and manage those campaigns, you can really apply some technology here to come up with a system that will make that job simpler. So I'd like to take the remaining time to share with you some of the kind of must-haves I would say to consider when partnering with a vendor for secondary services or data products. And we're going to highlight some of that AI that I've been talking about and really focus on the importance of choosing the right partner to help maximize your profitability on every single loan transaction. All right. So if you are operating in the secondary markets, maybe you're selling to best efforts investors to sell loans, you're probably pretty familiar with the term mandatory delivery. And going mandatory is the next step in elevating your secondary market strategy. And you can provide some significant operational economic benefits to your company by managing it with the best use of technology. Choosing the right hedge advisor and the platform is going to be key in actually picking up every single basis point that a transition from best efforts to mandatory can offer you. And I believe the ideal partner should really have a large market share. And at OB, we have over 40% of all loans hedged and sold into the secondary market flowing through our system. We support over 300 customers. I would say that that's the target, kind of vendor, somebody with a proven track record of successful pipeline risk management and all the tools that they can provide you to leverage, their data and your data to create meaningful tools and reporting that can provide you the knowledge to make some quick decisions, especially in these volatile markets. They should always be innovating to provide more ROI to you through releasing new features and enhancements to their platform. And I'm happy to say, we have 40 dedicated developers to our hedging platform. So every 2 weeks, we're publishing new features, and we actually review those in webinars at the end of the month with live demos with our product team. Really cool stuff to see in the progression of technology, even in this day and age where it seems like we've kind of got to an end game, right? We've got platforms, they're all cloud-based. You've got everything in one from, pipeline risk management to selling loans, but there's always improvements to be made. So you want a partner that can really advance the software that you're going to be using and continually add value to your relationship. And when I speak to customers, I emphasize that choosing that right partner when moving to mandatory is the #1 way to increase profits, especially on this limited production. It's going to help you pick up every single penny of execution available out there in the secondary market if you do move to that mandatory. Now, not only can you increase profits, you can also become a little bit more efficient. You can reduce that effort required to lock and maintain best efforts commitments and still have that option to sell loans, close loans, best efforts on occasion when that best efforts pricing beats out mandatory. And if you're already moved to mandatory, managing your risk and selling loans can be made a lot simpler with a strong platform that deploys AI in meaningful ways to save you time, explain the changes that are actually driving your profitability in your position, and helps you, keep everybody informed from the C-suite down to secondary of what's actually driving your profitability. I think that everybody here is probably pretty, dead set on being profitable in the future. So moving to mandatory is just one of those, surefire ways to improve your profitability on the secondary side. And I think that, if you start streamlining things, you get that streamlining effect from your lock to loan, pipeline. You move to mandatory, central lock desk, delegated underwriting. It's going to give you the ability to have a single set of lock policies and a standardization of your underwriting guidelines, leading to that, smooth, efficient, back office production, kind of manufacturing process, right? It's going to spur on faster closings, increase your capacity for handling, those volumes when they do increase. And it's going to help you elevate that borrower experience, which is going to help bring those borrowers back. And moving to mandatory can allow you to pass on a portion of your mandatory pickup through to your front-end pricing so that you can offer more competitive rates. Rate and experience together create that positive feedback loop to really drive production and can be strengthened by the right technology stack. And we do have a great case study that we just published with one of our partners on optimalblue.com about their use of our hedging platform. And it's a really great read. I suggest, take a look when you have a time. All right. So let's jump right into our hedging and trading platform. I'm going to talk about some of the must-haves I believe are necessary to be successful in hedging. Number one, real-time analytics. If you've got a platform or maybe you're using Excel and you can't pull in data in real time, market data so that you can get real-time analytics on your risk position, you're missing out on a lot of intraday market movement, right? The volatility these days, we see pricing move up and down. You want to be able to rerun your position so that you have a clear picture at the time of what's going on. Make a determination. Should I be selling loans? Should I not? Should I hold off? The only way to do that is having your real-time LOS integration so that you can push and pull data, right? So you want to be able to pull data into the system without having to transfer files. You want to be able to push back after committing loans. You want that system of record to be updated and have the integrity of data that only an API can offer. With our system, we have dynamic reporting. Traditionally, risk reporting comes in a PDF or an Excel. We actually build our reports into our tools so that you can use the data that you have available to you to your benefit. It's also really important to have a web-based platform, right? You want to be able to access this from anywhere in the world. You don't want to be tied down to a specific PC in an office somewhere. Cloud computing, that's also huge. If your vendor does not offer cloud computing, they're going to be restricted to, server racks, potentially server racks on premises. That's a big problem. It's very hard to expand those. It's very hard to keep them well maintained. Costs a lot of money. Cloud computing, completely scalable. For us, we have 300 plus customers. If we had 600 plus customers, we'd be able to scale those resources quickly, and you would never see any downtime or any change in your responsiveness when using the tool. And mobile friendly, of course, these days, using everything on a desktop is not viable. You need to be able to use a tablet, a cell phone, a laptop. Wherever you go, you should be able to tap into your platform and really access your information. And this is all going to create those efficiencies on your secondary team, right? You're going to be able to manage your risk more precisely. You're going to get that accurate information to make the decisions that you need to on a daily basis. And you're going to be able to look at your information that you've created, all the results, and really back test them, take a look at performance and make those strategic decisions to move forward. This one is big. I really like data alerts. So if your system does not police your data integrity, you've got a big issue. I think this is a phenomenal system that we have. We have 50 to 60 pre-can alerts that identify and address issues, and it's going to give you an information based graphic like this, where you can see the severity level of these issues. You can see the exact issue written out in plain text, as well as a remedy for solution that's going to drive you to reports or different tools in the system to actually address those issues, as well as give you the loan or trade level detail by really providing you a tabular pop-up so that you can copy paste or investigate those details further. And I think they're so important to really keep your data clean, that we really believe that emailing these out to the right groups is important. So on every single one of these alerts, you can actually define a distribution group, and that's going to keep the key players in check, right? You don't have to communicate that information to them directly. They're going to get an email notification with all these same pertinent information details, and they're going to be able to address that issue now instead of letting it flow through the system, continuously cause problems, and then in the end, actually affect your profitability. And that ability to maintain your data integrity is going to really help you just remove that manual effort of communicating these issues, getting them resolved, and then those cleaner data points are going to help you maintain a tighter hedge. Intraday activity. So we talked about intraday movements, LOS direct connectivity with the API. You're going to be able to actually pull in your intraday activity from your actual locks and fallout, as well as project out what expected locks you should see for the rest of the day based on historical input from your LOS data. You can actually take a look at your production based on the period of time, narrow that window down. So if you need to make changes now so that you can go attend a meeting for a couple hours and come back, you can make those changes based on these projections and really come up with a good coverage while you're away from the desk. And having those projections really based around all of your historical data based on historical look back period will allow you to judge exactly what kind of expected lock volume you're going to see on this specific day in this specific type of product and note rate range. And that's going to help you inform your hedge decisions, right? This data can then go into your hedge selection decision making and really inform exactly what coverage changes need to happen. And that's going to help you not overtrade your position. Overtrading your position is the number one way to increase your hedging costs, right? Transactional hedging costs. So we want to reduce those hedging costs by making the correct hedging decisions. And that's going to overall, help you retain all that best efforts mandatory spread as much as you can to maximize profitability by reducing those hedge costs. On the loan sale side, everybody these days is dealing with bulk aggregators. If you are, you definitely want to have a market movement adjustment. And what that means is bulk aggregators are sending bids back to sellers throughout the day. You may have asked for it to come back at a specific time, but they might send it a couple hours early or half an hour late. You want to square up those pricings compared to your best execution analysis run and really be able to compare apples to apples. If your system doesn't have market movement adjustments, you could be making the incorrect decision. Best efforts pricing. Our OBPPE integrates directly to our platform on the hedging side so that we can pull in all that investor best efforts pricing and eligibility and scrub everything so that we can include it in our best execution analysis. And roughly 10% of the time we see best efforts pricing actually beat out mandatory pricing. So it may be the best option. So just moving to mandatory doesn't mean that you're never going to do a best efforts commitment again. It just means that you need to be taking advantage of it strategically. If you're doing cash window loan sales with one of the GSEs, we have API integrations there. So you no longer have to go to their website and do commitments. You can actually do all the commitments, all of your pools all at once with a single click of a button, compare pricing from the live pool versus what you had last downloaded and commit those right away. We push and pull all that data back and forth, and that goes right back to your system of record. Having that commitment data really flow right back to your LOS is a huge lift. I know the process of actually, entering this information manually is really, really a far in the past problem. But if you are still doing it, you got to catch up. I think that having all of these things, coupled together in a commitment, workflow so that you can take care of your bulk commitments, any AOT opportunities associated with those, your cash commitments and your best efforts, MBS, all that stuff, having it in one commitment workflow really streamlines the effort, right? You don't want to make loan sales any harder than they already are. You want to make that as simple as possible. And having that streamlined workflow is going to help you save time, reduce that manual effort, and improve your secondary execution by being able to include all those different options, investors, delivery types. And then after your loan sale, you want to be able to review your execution history. And that peer comparison that we're going to be talking about on the next page is going to be huge. So peer reporting, number one, like I said, we have 300 plus sellers on our platform, and they use our platform to sell loans. If they're selling, agency or bulk, all that information is aggregated up, right? We take bid color in from all of our bulk investors, and we actually square that up so that we can compare investor rankings based on your specific pipeline of loans. So depending on what type of products you are creating and selling, different investors are going to be more impactful on your execution. So we aggregate all the bids that come in for all 200 plus investors, for all 300 plus sellers, and we create investor rankings. And we will talk to you about those investor rankings and suggest the proper investor mix to maximize your profitability. And we really think that strategizing on a regular basis with your secondary hedge advisory team is going to help you improve your investor mix as well as your execution. So we're going to talk a little bit about AI here. We have a well-established position recon tool from our legacy system. Compass Edge is our new cutting edge system with those AI advances. So of course, we took our detailed attribution analysis that we're well known for, and we leveled it up by feeding in this information into our generative AI large language model. And we actually had it trained to kind of report back as a senior secondary person. So instead of having a team member take a look at, say, tabular data from Excel and try to break everything down and look at what's changing and focus in on things, we categorize that, give that to you right away. But on top of that, we then feed it into the language model. It comes out with this summarization. We call it an executive summary, but it's a factual, unbiased statement of exactly what happened to your position. How did I get longer today versus yesterday, a day over day comparison. We also give those top 5 reasons for change so that you can focus in on what's most impactful. And this is going to help you eliminate that stare and compare process on a daily basis. Could take you 5 minutes. It could take a couple of hours if there's some real wonkiness there. But we love this so much, and a lot of our customers love it so much that we created an email in the morning that we call the AI daily briefing. And it's actually got all 3 of our AI tool summaries listed out there so that everybody on your team can be well aware of what's going into the position and what's happening with your profitability. And this is going to create an efficiency in monitoring, right? You don't have to actually live in the platform to get this information. Maybe your C-suite doesn't want to dive into the platform every day, but they could. There's absolutely no limits on how many users can actually use a web-based platform like this. But they'll be able to get that information and make decisions without actually having to step in. So on the profitability side, we also have those recon tools. We do that detailed analysis and categorization, and this is going to help you, again, with that visualization, right? We give you that visual chart, shows you where you're gaining and losing in different categories, and then we feed all that information to the language model again and get that executive summary, and it really helps eliminate that manual process on a daily basis. It helps you dynamically improve your strategy by focusing in on those drivers, and just gives you that overall clarity amongst the team of the factual statement of what's going on. There's no CYA, somebody trying to cover up, a mistake or anything like that. That can't happen, right? You don't want to have to trust a human these days to report on themselves and their performance. You want to be able to take a look, with factual evidence. And we took that one step further. So our daily profitability recon was so popular that we wanted to level it up and do a monthly summary. So we actually take 20 plus days of the month records, feed it through the system so that you can navigate through all the noise and isolate those real changes, summarize all the results, and give you a chart on the right so you can see your trends, as well as that executive summary. And I think the way that we've instituted our AI has been really beneficial to just streamlining those secondary activities, really understanding what's going on, eliminating that daily burden, and helps reduce those interpretation errors and allows you to review your monthly performance and compare it to other months. You can flip through different months and take a look. So really beneficial stuff here. As far as AI, we also have deployed documentation reading for trade checkout. We're working on a few more AI tools that I can't announce yet, but they will be coming, in the next couple of quarters. So this is one of those AI tools that we did release maybe a couple of months ago at our summit. This is called Ask OB, and it's not just a chatbot. It's not going to give you standard, knowledge base information. What it's doing is it's actually tapping into our customer specific PPE lock data, right? So you can ask specific questions about your data and really interact with those topics, expand on those topics, get different graphs, charts, and visualizations. And that's going to help you just get to answers quicker with less effort, because you don't have to actually go into a SQL database or manage some Power BI kind of workbook. You can actually just come in here, play around, ask the questions that you want, and anybody on your team can use this. So really gives you a lot of access. And as I mentioned, it is PP data enabled right now, but in the next quarter, we're going to be rolling it out with hedge and trading details as well. So you're going to be able to access primary and secondary market information directly in one place and make some correlations on those data that you couldn't get from any other platform. And I think that's huge in being able to leverage those insights to drive your business strategy. Okay, so we talked about recapture a little bit on the slide of the matrix of different solutions, but what is recapture? So recapture is the idea of borrower retention, right? If you are trying to bring business back to you, you want to have that great experience so that those borrowers return. But in the case that maybe they're unaware of what's going on in the industry, they may not be aware that they have the opportunity to maybe lower the rate, save some money, or tap into the equity that they built in their home. So our recapture platform, we call it Capture, is actually a data mining process where you can feed in different lead sources and actually create the opportunities that you want to focus in on and actually come up with actionable pricing that's coming from our OBPPE instance. So you've worked hard to build all your investor pricing out, your margins, all of the eligibility. All that information can be leveraged, right, by this system. So we do API calls back to the OBPPE and actually pull up those pricing scenarios, run them through, come through with results that you can then distribute out to your your customers via your loan officers, right? And so being able to mine for those opportunities is really important, because as we've seen over the last couple of months, rates will move up and down. When they do drop down, it's for brief periods, right? So you want to be able to take action quickly with the accuracy of the pricing from the PPE to actually bring those payment savings and cash out proposals to your customers. And that's going to instill a lot of trust, right? You're trying to build that trust with them, create that borrower experience where they want to come back to you every time. And the only way to do that is really being active, right? Marketing these days, the big guys out there, if they're out there talking to your borrowers, they are being aggressive. They want to make sure that they're picked, right? And if they do get picked by your customer, you may never see them again. They have the tendency to recapture customers 4 or 5 times over the life of that borrower. So it's really important to have a system where you can do all these things to actually, recapture those borrowers and be proactive in defending that servicing book if you are retaining servicing to, offset any kind of runoff that you would see in the portfolio. So that preservation of MSR portfolio valuation only comes by the addition of new loans. So you have to really focus on recapturing borrowers. And if you start to look at recapture and the ancillary income you could get from cross-selling different products, you can actually see an increase in your MSR price, right? You start to factor that into your economic value valuation, and you're going to come up with a higher MSR price that you can then, take and pass on through your front-end pricing, get those more competitive rates. So again, borrower experience and rate is going to really help propel you forward in profitability. So overall, when you are talking about recapture and you want to focus on those opportunities, you want a system that can automate the lead selection, right? You want to be able to define your different scenarios. If you want to look at refinance opportunities versus, say, a straight equity play like a cash out or a HELOC, you want to be able to compare your fixed versus ARMs. You want your system to be able to go ahead and determine a recast on your ARM if you, say, are 90 days out. Be able to take a look at conventional versus government products, or if you're getting into that non-QM or jumbo space, be able to compare that as well. And you want that to be linked to a PPE, a powerful PPE that has a reputation for accuracy in pricing, so that you can get those actionable leads that you can pass out to your loan officers or push right back into your CRM for further marketing campaigns. And I think that's one of the coolest tools that we have, this capture product. It's hot right now, especially because it's harder to find those recapture opportunities with this high interest rate environment that we're in. But because we've been above 6% rates for so long, we're looking at 18.5% of all outstanding mortgages being above that 6% rate, right? So when we do see a little bit of a dip down to that 6% rate, that's almost 8 million loans that could be refinanced. And you've got to be tackling those and blocking others, because every other credit union, IMB, and bank out there are going to be looking to recapture your borrower or capture your borrower. And the last piece I want to talk about is just social media publishing, right? We have a lot of social media these days, both personal and corporate. And to be able to organize all of your corporate media is really important, right? So publishing this stuff on a cadence or a schedule is really important. So to be able to create, organize, and store all that content for broadcast in a compliant way with consistent messaging is really going to be important to maintaining your voice in the industry. You want to be able to create standard templates, maintain all those assets in one library, and schedule those posts across whatever networks or organizations that you're working with. And not only that, you want to be able to track those metrics afterwards. What's my engagement like? How strong is this messaging? Should I be changing my messaging? All that can be done with a platform, right? So on our platform here, you can see you can manage all that stuff from one website. Very useful. And we're going to talk about audits on the next slide. So social media audits, again, not only tracking the engagement, you want to make sure you're compliant in your messaging. You want to make sure everybody that's posting publicly is not stepping over those regulatory rules, and really having a comprehensive audit review of all the social media postings that happen within your company is a great way to simplify and be proactive in finding and correcting those issues to ensure that compliance. And honestly, I think we've talked so much today about different technologies that you could utilize to be more profitable and efficient that we can wrap up here, and I'll kick it back to Drew for his final thoughts.
No, I appreciate it, Jared. And again, thanks so much, everyone, for your participation today and, joining us. Again, we're very thankful for the New York MBA to have us today. Again, as we mentioned earlier, please feel free to reach out, as we would love to talk to you about anything technology related. If you have any questions, not only about the PPE, hedging and trading, all the things that Jared and I went over today, we'd be happy to discuss this as well. But otherwise, we'll turn it back over to the New York MBA.
Thank you both for presenting today's session and providing our members with great insight on the technology solutions that Optimal Blue offers. Thank you.
Thank
Jackie,
you for having us.
you have anything to add?
No, great presentation, guys. Thank you so much for joining us today. Elizabeth, I'll give it to you for the final remarks. I know we only have a minute.
Oh, that was pretty much it.
Okay.
Our presenters, and again, bringing us insight today.
Thanks
Perfect.
everyone for joining.
Thanks, everyone.
Thank
Appreciate
you.
it.
Take care, everybody. Have a great day.